Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome to Business Today Television. Good morning to you. Counting down to the interim budget for 2024-25. Less than 57 minutes left for Finance Minister Nirmala Sitharaman. Yet another outing as India's longest serving full-time woman finance minister. An interim budget, but as Prime Minister Narendra Modi set the expectations and budget that will give Disha Nirdesh, guidance and direction to the course of the economy, government spending, capex allocations, a host of other numbers, including that big number that the markets will be looking forward to, the borrowing number. And we will continue our programming that we have started early today. And joining me now, Sunil Singhania, founder of Abacus Asset Manager, R. Gopalan, former Secretary of Economic Affairs, a veteran of many budget making years, and also with me Saurav Majumdar, the editor of Business Today, India's oldest and finest business magazine. Sunil, I'm coming to you right away. Markets ticking, some stocks reacting, including Paytm, to what has happened after the RBI's decision on it. Overall, what is the sense that the markets have as far as this budget is concerned? Just another day, or is something being looked for very keenly by the markets from these numbers?
Hi, good morning, and thanks for having me. I think if you actually see the last 2-3 years, the movement in the markets because of announcements in the budget has become narrower and narrower. And I think that is clearly because of the fact that policies have been very consistent, and we have not had sporadic announcements here and there. Obviously, like the last budget, we had a huge allocation towards, planned expenditure to the extent of almost 10 lakh crores. And to that extent, there was some definitely interest in those kind of companies. But I think in this one, it is an interim budget. And second is, I think expectations are that what has been set up by this government over the last 3-4 years is going to continue even going forward. So I would say the markets are basically not expecting anything negative. At the same time, because it's an interim budget, we don't expect anything significant to be announced, except maybe a few announcements, which will just highlight that the government intends to carry forward its agenda of growth in the economy, growth in infrastructure, growth in the overall ecosystem to make in India, and so on and so forth.
All right.
Yeah, Mr. Singhania, I wanted to ask you, what is the market's outlook on the fiscal consolidation roadmap? Because I think it is very clear that the government wants to be on that fiscal glide path, and yet there is a balancing act which it needs to do, given the fact that there are social sector schemes which they also need to put money behind. What is the market's sense on that, on the fiscal deficit figure?
I think India has done phenomenally well on the fiscal deficit front. If we would not have had COVID, we would have had a roadmap where fiscal deficit might have been, maybe 2.5%. So COVID set us back by 2 years. But I think last budget, the government set up an agenda of bringing the fiscal deficit back to around 4.5%. And we are on track as far as that is concerned. In fact, tax collection this year so far has been trending higher than what was envisaged. And I think to that extent, the government would have a buffer as far as, spending on some of the social measures are concerned. The other thing is, if you look at the fertilizer prices, if you look at the fuel prices, I think fuel, there's hardly any subsidy left. So the only major subsidy which is left is food and to some extent fertilizers. On the other hand, if you see, the government's balance sheet has only become healthier. I think the market value of government stake in the PSUs have doubled, or maybe, gone up 2.5 times. So in fact, the balance sheet is very, very strong. And there is enough ammunition for government to monetize some of these assets, which have been slow last 3 years. But now there is definitely, I would say, some possibility there. And on the third front, I think a lot of these spending has also been done by government companies which are anyway healthy as far as profit is concerned. So I
Right.
think given the fact that government will continue to spend on social measures, and we should, because we are a poor country and we want everyone to be out of the poverty, out from the below the poverty line kind of a status. I think we are in a good situation, right?
All right. Sajid Chenoy, the MD and Chief India Economist at JP Morgan, has also joined us. Sajid, morning. Before I come to you, I have Mr. R. Gopalan here with us. Mr. Gopalan, the big expectation really from a political economy point of view is the temptation that the government of the day may have to, for example, give more money for the farmer, the PM Kisan Nidhi, or enhance the allocation for Manrega, along with other social spending. What's your own sense? Is that a path that the government will choose to go down on today?
Well, government will certainly look into the forthcoming elections, and therefore they will certainly look at how to advertise or how to say how these programs are performing and what benefit it is giving to the people. Especially, they have to look at youth, women. They look at tribals, farmers. They have to look at poor people. So all these things, there are schemes which are there. They may look at modification a little bit or some increase in some of these things. But this interim budget will look at what is the path that is going to be laid out by the government for the next 5 years. What are the how are they fiscally going to be prudent? At the same time, debt levels, nominal growth, tax collections, capital expenditure, disinvestment target, sector-wise expenditure like your health and education kind of thing, efficiency enhancement measures on especially in the expenditure side as well as on the new tech areas, how government is going to look at them. These are some of the things which I look forward to in the interim budget at this point in time. But
Right.
who knows? There can be many other surprises.
Absolutely. Sajid Chinoy, talking about surprises, one of the surprises is, at least from a data point of view, was the finance ministry's assertion and the fact that they talked about aspiration for 7% growth. How feasible is that? It's very clear that some of the numbers have been revised upwards for GDP projections, but do you think 7% is something that is likely to happen very soon?
You know, what we saw this year was, interestingly, I think this year's budget could well be a template for the future, that the government had budgeted 10.5% nominal GDP growth. We're getting only close to 9 as per the first advanced estimates. But despite that, tax buoyancy was much higher. So we may well get tax growth to be significantly higher than what was budgeted. But budget was 11%. We're running at a 14% growth rate, and that number could well be close to 13% by the year is over. So what enabled that this year was you could actually bring the deficit down. We expect the government will reduce its deficit from 6.4 to 5.9 without having to cut back on expenditures at all. What we may well see this morning is that expenditure to GDP is the same as last year, despite the deficit coming down, which meant that all of the consolidation happened on the revenue side. It happened through buoyancy of direct tax revenues. It happened because of indirect tax, non-tax revenues. And the other is that the quality of expenditure has changed a lot. If you look at, if the budget targets are met this year, capital expenditure would have doubled the central government balance sheet in the last 4 years. The ratio of revenue expenditure to capital expenditure, which was 6 times back in 2019, may well be just 3.5 times in 2024. So from my perspective, that is the template we'll have to follow going forward, that it's undeniable that we now have to turn the focus on fiscal consolidation. I think it'll be really important for the government to meet its deficit target 2 years from now of 4.5% of GDP. But you want to do that without too much expenditure compression. We still need targeted welfare support. We still need to do more public investment till the private investment cycle picks up more robustly. And so to achieve both these objectives, which is deficit consolidation and higher capital expenditure, one will have to focus single-mindedly on the revenue side. And this year offers a good template because we have seen revenue buoyancy go up. In fact, this could be the first year, 23-24, where combined taxes, center and state to GDP, could exceed 18% of GDP. So I think those are the key variables to monitor going forward.
Sajid, I wanted to ask you a question relating to, I mean, you spoke about capital expenditure and, how much the government has done on that. I want to ask you, I mean, the aim, of course, of the government heavy lifting, doing a lot of the heavy lifting on the capex front, is that eventually private sector will be crowded in, right? Private sector investment will be crowded. Do you see that happening? Because, despite all the bullishness in the corner rooms, one doesn't really see that much of action on the ground, and the government continues to have to do the heavy lifting on public capex.
So we're seeing this happen in some sectors. I think we're seeing this in cement and steel, but you're right. It's not as broad-based and as strong as we want. And for me, that's no surprise, because if you look at what the constraints are today, these are not structural constraints in the sense that corporate debt is high like we had it for much of the last decade. Corporate debt to GDP has come down, balance sheets are stronger, companies are cash rich. The issue is now more cyclical. If you look at capacity utilization levels that the RBI surveys put out, these are still in the low 70s, 73, 74%. Now think about the global environment. We're living in times of unprecedented uncertainty. People worry about hard landing versus soft landing around the world. US rates are at multi-decade highs. China has a lot of excess capacity, and there are concerns about China dumping around the world. So in this environment, I'm not surprised that a corporate private investment cycle could take a little bit longer till those utilization levels, go towards 80%, until some of this uncertainty is resolved, which is why I think it's premature to think about the public investment cycle withdrawing. I think this will need to be in motion for at least another couple of years, provide that demand visibility to the private sector so that private investment can then pick up the baton some time from now.
Sajid, that's a good point there, for at least 2 years, because that's something that everyone is looking to. Sunil, I come to you, and this is on a bit of data that government sources have been sharing with us earlier today morning, and this is to do with the level of credit flow numbers in the last 9 months. At almost 23 rupees trillion in the first 9 months, credit flow, we are being told, is 1.6 times versus the same period last year. Rural credit is booming. That's the point being made, and therefore the government would like us to all believe that 7% plus growth looks like the new normal. Do you concur with this view, especially from a credit flow point of view? Sunil Singhania.
I think credit has been strong, and that is the reason why some of the banks have been facing some issues as far as raising deposits. But coming to your 6.5%, 7%, I think India structurally tends to grow, at both levels, because one, obviously, we have a young population. So the demographics are in favor. We have more and more women coming into the working population, and I think that means that there are more productive people being added on a, I would say, yearly basis. The other thing is we are predominantly a domestic economy. And we always say this, that in the years 2022 and 2023, despite the world growing at 0% or even negative, India ended up growing at between 6 and 7%. And I think once the world stabilizes, which looks like stabilizing, I think inflation surely has peaked out, interest rates surely have peaked out. And though there might be, questions over where the Fed will cut in March or April or May, I think the trajectory globally is of interest rates coming down. And hopefully the world will also start to grow a little bit, starting in the next few months. And I think that should also help the 17, 18% economy of India, which is dependent on export. So I think from our perspective, credit growth obviously helps. But anyway, the circumstances are pretty good for India to target a growth of 7%. And we should also not forget that, last 1.5 years, foreign flows have been like wishy-washy. I think we are heading into a situation where India seems to be in the mainstream as far as, the foreign investors are concerned, both from an FDI as well as FII perspective. And I think that capital flow into the country also aids growth. So, last 3-4 years, it's been predominantly the government expenditure, but we are already looking at signs of private sector capex also coming in. I think over the next 4-5 years, targeting growth of 7% plus and expecting that to happen seems to be, a fair case.
Absolutely, Sunil, and I know you have to go, so I thank you for sparing time with us today. Coming back to our continuing programming, just some numbers, viewers, to continue to drive home the point that this budget could not have been presented at a better backdrop given the overall India growth story. M&M January domestic passenger vehicle sales at 43,068 units, up 30% year on year. Overall auto sales up 15% on year. Just a very small sample, and let's try and bring up the M&M stock as well. I want to come to you, Sajid. In terms of getting that growth aspiration fulfilled, what is that you would feel is most necessary for the central budget to do, if not today, but at least directionally give us a sense and follow it up in July, because pretty much a return of the same policymakers is a given?
So a few things. I think, if we should certainly aspire for 7% growth in the coming years. We're going to need that growth to create the jobs given our demographic outlook. The key is going to be that so far, as was alluded to, the public sector has done a lot of the heavy lifting. Now, if you look at the quantum of deficits, the central deficit, the center has been consolidating, and the fiscal marksmanship has been very good. But this is a year where state deficits may actually widen. Now, again, states are pressing on the capex pedal, but the implication is state deficits are widened. So the consolidated deficit still, is quite elevated. And one objective in the coming years will be to bring that deficit down to create space for the private sector to invest. But the second point really is that, as I alluded to earlier, we can't stop on the public investment push. I think the multipliers from infrastructure investment are large. We're just beginning to experience how large those multipliers are. So this needs to be a multi-year infrastructure push. So the challenge again is going to be, how do you continue this push for the next 2 or 3 years and bring the deficit down simultaneously? Finally, I would say this is not directly a budgetary issue, but the issue for the next administration is, we're seeing blue collar jobs are of the key, and we're seeing a lot of multinational companies moving around the world. The question is, what more can India do to attract multinational companies here? What more can we do to integrate ourselves into global supply chains? What more can we do to increase the likelihood of blue collar jobs? So for me, it's essentially kind of creating the conditions for private investment and blue collar job creation down the line.
Okay, before I go to Saurav and Mr. Gopalan, Sajid, just one quick point. In terms of the overall borrowing target, what's your own sense of what the finance ministry is likely to indicate?
So our own sense is that, ideally, I would like to see that the deficit is reduced from 5.9 to 5.2. Remember that government's target over the next 2 years is to bring it down to about 4.5% of GDP. So I think equitable burden sharing across the 2 years would make sense. As you alluded to, growth has picked up. This is the time to reduce deficits. It will be the first year of another administration. And so I'd like to see ideally the deficit go down from 5.9 to 5.2, given the fact that state deficits have picked up this year.
Sajid, I just wanted to ask you another supplementary on the issue of borrowings. This year, Indian bonds get included in the JP Morgan bond index, right? So do you see that as a kind of some kind of a relief for the government in terms of the borrowing pressure?
We've seen actually India's 10-year bond yields have been remarkably stable over the last year or two, even as US 10 years have moved up. And part of this is because there is already strong demand for government bonds. And the part that we underestimate is just what's happening on the pension and insurance fund. That you're seeing 15% growth in assets under management for pension companies, insurance companies, and these institutions are buying at the very long end of the yield curve. So the yield curve has become very flat. If you look at the 30-year yield compared to the 10-year yield, that premium used to be 90 basis points. It's now down to 20 basis points because there is so much demand at the long end of the curve. And that has allowed the government to issue more and more debt at the long term, increase the terms structure of its debt, which is very positive. So already we're going into a situation where there's no real pressure on bond yields, but you're exactly right. The fact that we will be part of the bond index means India can expect anywhere between $20 to $25 billion of passive bond money that comes into the market this year. So I think bond yields is not something that we should be particularly concerned about, especially if you're on a fiscal consolidation path where if you target a deficit of 5.2, your gross and net borrowing in absolute terms could potentially be less than this year. So if supply is less and you've got these passive sources of demand, I think yield should not be a problem this year.
Sajid, you further underscored the point that the macro backdrop perhaps has been the best in the recent past. Mr. Gopalan, I want to come to you on one small point, but again indicative of the way policy making is happening. A day before the budget, import duty cut announcement on mobile phone components. Could it not have waited for a day? The fact that it was announced outside of the budget, does it indicate anything?
No, it could have happened in the budget, but the fact that it has been done outside the budget indicates the kind of emphasis and the message which government is trying to convey to this, that this sector is important. That's how one should look at it. But ideally, it should have come under the budget itself. I think these kind of things are little. One day before the budget, these are all little difficult to kind of, understand or digest.
Right. So, Saurabh, I want to come to you on the messaging. We heard Prime Minister Modi yesterday, Disha Nirdesh, and that bite bears a repetition to play out if we get time. What's your own sense about the messaging, 10 years of Modinomics and data upon data that we have been showing on the screen, and we can talk about it, clearly showing that there is a larger design that Prime Minister Modi drives through pretty much every single policy announcement, including the budget of this government.
Yes, Siddharth, absolutely right. I think this is a great opportunity while the market and generally there cannot be too much done because it's an interim budget. I think it is definitely a platform which the government, the finance minister will also use to showcase the kind of work which has been done over the last 2 terms. And I think this being an election year, that becomes even more important, that you need to showcase that to the nation in that sense. Equally, I think there will be some messaging about the fact that fiscal consolidation remains a priority, even as there will be some pushing of money in the hands of people, individuals, and probably also towards the social sector schemes.
Right.
So I think that balancing act will need to be there, but I think this definitely is a great occasion where you can showcase the market,
right,
to the market what the performance has been over the last 2 years.
One final question to Sajid Chinoy as he leaves. Sajid, broadly speaking, what would a third term for Prime Minister Modi mean for India's economy over the next 5 years?
The way I think about this, the first term was very much about cleanup. It was cleanup of the banking system, cleanup of real estate, cleanup of taxation, inflation targeting, building up of reserves. The second term was where the public sector expressed itself, big push in infrastructure, right? And I think the third term will have to be about how do you stoke a private investment cycle? How does India more decisively join global value chains? How do we push up the share of manufacturing? How do we create those blue collar jobs? So I think that would be, from my perspective, the big idea for the third term.
Absolutely. Sajid, thank you very much for your time with us today morning, and we hope to get you back very, very soon. Saurabh, I come back to you and we can continue with Mr. Gopalan as other guests also join us. This point about the third term expectations, and the first term was of a certain nature, term 2 and term 3. From your point of view, the big issues, the legacy factors that this government inherited from the Manmohan Singh era, many of those have been cleaned up, including the IBC for that matter. Getting the private sector back up beyond just some of the sectors like renewables, where most of the investment seems to be focused, what in your view is necessary that needs to be done?
I think this third term, like Sajid also pointed out absolutely correctly, is should be about pushing the private sector investments into the economy. Because, as I said, and I keep saying that much of the heavy lifting continues to be done by the government, and I think the next 2 years, like Sajid said, probably will need to have that continuing. But equally, the private sector now, despite the global headwinds, after having navigated that, needs to come back into actual investment. It's just not enough to be bullish about the economy and how well the government is doing. You need to put your money where your mouth is. That's number one.
But Saurabh, I'm going to interrupt you here before I go to Mr. Gopalan. RIL, Mr. Ambani is investing. Adani Group, Mr. Adani is investing. We hear similar plans, massive investments from some of the biggest well-known names in corporate India. So why is there a concern at all on the private sector investment? Wouldn't the private sector invest where it sees an opportunity? It sees an opportunity in renewables as an example, and it's going all out there, Saurabh.
Absolutely, but it needs to be much more. That's the point I think everybody is expecting, that, you know, it's not just about the 4 or 5 key large groups. Yes, they are investing, they are announcing big ticket investments across infrastructure, across various projects, renewables being a big part of that, of course, and that is required, you know, because that is the key you know, aim of the economy and the government. But you need to do much more. Consumption, as we've been discussing, Siddharth, is not really up there. If you see the FMCG company results, they are under pressure. So I think, where is it that the government needs to focus? What more needs to be done is the kind of you know, initiatives which needs to be seen in the third term. And, you know, this is best, the government cannot be better positioned. If they indeed get a third term, you cannot have a better position in terms of being the sweet, you know, government is on, the economy is in a sweet spot, and I think we need to really take it up from there. But remember one thing, the mini survey has also highlighted, and this is something I wanted to bring to Mr. Gopalan as well. There are, you know, headwinds, global headwinds, which the mini survey has talked about. There is the AI, specter of AI taking away jobs, and the whole, you know, the easy labor arbitrage becoming a problem. I think those are concerns which even the mini survey has highlighted, Mr. Gopalan. I'd like to hear your views on that. Also, the other point, the other elephant in the room, in the sense, the disinvestment receipts. The disinvestment has become another you know, problem area, and is it now better to have smaller ticket you know, disinvestments rather than have these big grandiose ambitions?
And before Mr. Gopalan answers that, Mr. Gopalan, just to introduce Samiran Chakravarti, the Chief Economist for India at City Research. He is with us. Samiran, we'll come back to you just as Mr. Gopalan answers Saurabh's question.
This is Saurabh, and this is a very, very ticklish thing. If you look at the employment scenario, you will find that about with the 15 to 29 age group, not many employed, not willing to, or not in education, not in training, that constitutes a very significant chunk. That shows the depth of the issues which we are facing as far as employment is concerned. Now, how are we going to improve this? I mean, what kind of a vocational training improvement we are going to get in? How are we going to retrain the people who are already there? How are we going to get the skills area enhanced? Because there should be not only budget, but there should be ability to get the skills improved as far as the people are concerned. That's a big job. So unless you do all these things, then how do you get the MSMEs to come back more efficiently to perform? These are some of the issues which government has to tackle before we look at the other problem of AI. AI will certainly take some of the jobs at a high level. They will take up. How many people get retrained and get re-employed into this is something which we need to watch. There certainly will be some amount of people getting, switching from this to the AI thing. But few jobs will certainly be lost. And that is something, there will be a concern. There will be a churn.
Well, job losses, Mr. Gopalan, are the big headline, and we are seeing global workforce cutbacks of a very, very significant order. And in the IT space in India, jobs also becoming a concern. We also have with us Vipin Sondi, the former MD and CEO of Ashok Leyland and JCB in India, industry veteran. But before I go to Mr. Sondi, Samiran, good morning. We are now just around 29-30 minutes for the Parliament to open. perhaps some noisy scenes that we will see, politics will play out, but Finance Minister will make her speech. What is the key numbers that you are looking forward to hear from Nirmala Sitharaman today, Samiran?
Thanks, Siddharth. I guess quite obviously, the first number that people would look at is the nominal growth projection for FY25. And based on that nominal growth projection, there would be an estimate of what the fiscal deficit is going to be. The street is thinking of a number between 5.2 to 5.5. Whether it is on this extreme or the other extreme, there could be some market reactions based on that. The third number to look at would be the capital expenditure growth number. Again, a very wide variation in the street from a single-digit number to 15-20% also. And this is a number which increasingly has become very difficult to interpret because a lot of off-budget capital expenditure has been brought on budget. So when we parse through the numbers, we will have to make a good call on how strong the capex momentum has been. And the last is whether there is going to be any signs of populism in any of the rural focus schemes or urban poor schemes, which in a lot of pre-election budgets could be an expectation from the market side. So I would probably look at these four things as the main observables from the budget.
Shobharan, there used to be, of course, a concern earlier as far as capital expenditure budgets are concerned of utilization by various ministries and departments. Do you see that concern having waned? Do you think that is no longer a problem and effective utilization is taking place?
So, if you look at India's capital expenditure budget, almost 50% of that budget is in just two ministries, roads and railways. And roads and railways are utilizing their money much better than before. So that's a positive. But if you think of, let's say, last year's budget, there was a 30,000 crore allocation towards the oil marketing companies' capital build-up. As yet, we don't know whether this is going to happen or not. But the big delta is coming from the fact that from a couple of years back, the central government is allocating a very large sum. Last year, it was as large as 130,000 crores to the state governments as for them to spend on capex. This number, how much the state governments are actually able to spend, last year this was closer to 75% only. So whether in FY24 this number is changing in a meaningful way, how the government budgets this number for FY25, I think that will be a big delta on overall capex.
Important point there, and viewers on the screen, two quick news points before I also go to our other guests and also introduce Rumki Majumdar, economist at Deloitte India. Big jump in January manufacturing PMI. Those numbers were flashing on the screen. We'll try and get them back up, clearly showing that along with services, the manufacturing story is chugging along very nicely. Some of the cost pressures, supply side disruptions being sorted out. Big jump in manufacturing. That is the latest number right there on the screen, 56.5 versus 54.9 in December. And alongside, Cabinet has also approved the interim budget for 2024-25. That was clearly expected. Vipin, you've been there waiting. And before I go to Rumki, a quick comment from you on the manufacturing story overall. Perhaps the best time in decades as far as India's manufacturing story is concerned?
Oh, absolutely. And the confidence and the need and the opportunity to really get in with global value chains. It just depends on how we position ourselves right now. I think it's a great story. I think we have to now make that big effort to move from 15% of GDP to 20% of GDP. It's extremely important that we do that. It will create jobs. It will create just a multiplier effect as we move forward. 2 or 3 comments over there to enhance it further. Number one, PLI schemes which are in position for certain sectors be expanded to labor-intensive sectors like toys, like apparel, like footwear. That will give a big boost to employment at different skill levels. We also can look at and ensure that Industry 4.0, which is now an absolute certainty, we create industrial innovation hubs at industrial clusters to support industries, especially MSMEs, to transition to Industry 4.0. Finally, on MSMEs, they are the industrial backbone. We must bring them back into the mainstream. Two things: reduce compliance burden, and second is set up a fund that will enable them to make this green transition.
Right. Good points there. And Rumki, I want to come to you. January manufacturing PMI is at a 4-month high. Another good set of numbers as we now count down almost 23 odd minutes for Parliament, the session to open. Rumki Majumdar.
Thanks, Siddharth. And yes, it's a good news. Finally, the efforts of the government is paying off. Last 10 years, the government has been emphasizing on manufacturing, and that to building high-end manufacturing capabilities. This is very much required because our import dependence on critical manufacturing goods has been very high, and that's why we need to be more self-sufficient and reliant on certain manufacturing goods. And over the last decades, we have seen the government emphasizing on manufacturing by giving tax incentives, infrastructure development through PLI schemes. So now I think we are seeing the fruits of it. So it's indeed a very good news that manufacturing is picking up, and I think budget will also have more such announcements to promote manufacturing in the high-end products so that we can move up the global value chain.
Okay, more guests joining in at this stage. Madan Sabnavis, Chief Economist at the Bank of Baroda. Samiran Chakravarti continues to be with us. Mr. R. Gopalan, my colleague Saurabh Majumdar, and Rumki Majumdar as well. I will go to Mr. Gopalan very quickly. You wanted to come in earlier, but that same point, sir. Manufacturing now firing, services contributing to our exports. Good tidings, and hopefully manufacturing will perhaps become as big as services eventually.
No, that's not. It cannot become as big as that. What we are still trying to achieve, our ideal aim of 25% of the GDP for manufacturing is something an ideal. We still are around about 14, 15. We need to move at least up to 20 to begin with before we jump into 25. Services will remain as big as that. I mean, 58, 59, 55%, that will remain as it is. Or it will, as we go along, if agriculture, would certainly go down in terms of GDP and services may pick up. But apart from that, what is important in manufacturing, Siddharth, is that the kind of, ability of people to invest. As of now, there is about 88 lakh crores of investment is going on at this point in time. Of course, about state and PSUs maybe around about 20-25 lakh crores out of them. But the big thing is how the private sector is really going to invest in this. And secondly, how MSMEs are going to be really made more efficient, and how we are going to handhold them to ensure that not only their inputs are, in some way properly balanced, and output also, how marketing is done for them effectively. These are some areas we need to focus on, Siddharth.
Mr. Gopalan, given what you're saying about the stress in MSMEs and the lower end of the economy, I want to again bring forward that argument which keeps popping up regularly about the alphabet, the nature of growth. Is it, do you think, really K-shaped, or do you think that's an exaggeration?
The growth, you're talking of whether the growth...
Yes.
Well, in my view, the GDP growth as we see today is not the correct one. It is much more than that. Because of the fact that deflators are being what they are at this point in time, you find some sort of a different kind of a number as far as growth is concerned. My belief is that my calculations show that if you look at the gross value of output, if you take into that and then work on that, we will be somewhere around about 305 or 306 lakh crores as far as GDP is concerned. Again, the 296 lakh crores that has been indicated in the advance survey. So how we calculate that the input and output are both deflated, and we are able to get that into account, then it will be possible for us. And if you go to producer price index, if we are able to get that, probably we'll get better picture of what the actual GDP is.
Okay. Samiran, in the run-up to the budget, government sources have pointed out one thing which has been part of commentary, which is rural distress. And the numbers that are being advanced in this regard is rural credit, which is up on a 9-month basis 1.6 times versus the same 9-month period previously. And the contention is that this credit growth suggests that it's not K-shaped, and India is growing and so is Bharat. What's your take on this? And because this is the macro point that will form some of the arguments and comments that are made by the finance minister very shortly.
So Siddharth, I mean, rural is such a huge entity in the Indian context that to paint it in one brush appears to be mistaken from our side. At least we need to make a distinction between rural farm versus rural non-farm, and the dynamics that are going on in farm and non-farm could be quite different. First, on the farm side, the challenge that we had seen in the past is that the agricultural price growth has been much weaker compared to the non-agricultural prices, which in other words means that the terms of trade were against the farmer. On top of it, the cost of agricultural production was growing much faster. Both these factors in the recent past have changed. For the last 7 months or so, food inflation is actually much faster than core inflation, and agricultural price growth has collapsed to just 1.5% by our calculation. So the farmer terms of trade has significantly improved. Unfortunately, we did not see the full impact of that on the Kharif season because the crops got affected by a dismal rainfall pattern. So we are hoping that the Rabi crop would be the first time when it will show up this both terms of trade improvement as well as the better production from the farmer side. So hopefully the farming part of the rural would show some improvement. The bigger challenge is in the non-farming part, where our sense is that the overall number of people there has significantly increased post-COVID. That's what is leading to NREGA demand staying even today higher than pre-COVID levels. And that's what is depressing the non-farming rural wage growth nominal to only about 6% or so. This is a more structural problem which would need solutions from creating more low-end jobs where these people can be accommodated. And then we will see probably a significant increase in the non-farming demand part of it as well.
Rumki, my question is to you, given the fact that there needs to be, and this is an election year, there needs to be some messaging as well in terms of the social sector. Do you see the budget pushing more money into the flagship schemes like PM Kisan and Manrega, given the fact that there needs to be that push in those segments?
Thanks. Yes, we believe that there will be a lot of emphasis on the rural sector as well as the social sector, because one, on the rural side, as other panelists were also mentioning, rural demand has not picked up as fast as the urban, especially the rich class has. So there will be certain announcements made to support the rural demand through price support or through ensuring that the food supply chain is managed. Similarly, on the social sector, the government believes that there is a necessity to invest in the human capabilities. So through skilling, through education, through health, these are some of the areas where the government has been emphasizing on in the past budget as well, and it will continue doing so this year. And in the interim budget, probably a lot of messaging around social aspects of improving health, women, gender equality, inclusion. All these aspects will be touched upon, we believe.
Okay, let's take a quick look at the markets at this stage. Less than 15 minutes left for Parliament to open. And let's try and bring up the Nifty at this stage. Okay, there you can see that. So up kind of flattish, frankly, and we'll also have the Sensex data with a bit of a delay I'm told, but clearly the market's holding on. Let's try and take a look at Paytm, where that is currently. It opened pretty much down 20%. Let's try and bring up Paytm stock right there, and then some other financial sector stocks. So there you have it. Nothing to do with the budget, viewers. It's because of what the RBI has done, and that sort of fits into the larger pattern of how the banking regulator is trying to sort of address concerns around unsecured credit. Let's bring up some of the big financial stocks, State Bank of India on the screen, and then I'll go across to Madan Sabnavis, who is here with us.
Is that a risk though, Siddharth, the unsecured credit problem booming? Because I remember in Business Today magazine also we did a cover story on BNPL. We called it the BNPL trap. Is that, do you think, becoming a bigger problem as
that's a great question, and in fact that's the point that I want to take to Madan Sabnavis. Who better than Madan to answer that? Madan, in all of sab changa hai kind of environment, is the credit aspect and particularly unsecured credit a matter of concern? The RBI certainly seems to be giving out all signals that it is keeping a hawk's eye on this particular aspect, the point that even Saurabh Majumdar asked.
Actually, the answer, Siddharth, is yes and no. I say it is a concern because the RBI has flagged it, and the fact that the capital requirements have been increased means that there is obviously concern here. And I think the RBI is very, very clear that it wouldn't like to get into action when a problem comes. It'd like to take action before the problem arises. When I say no, I basically mean that the proportion of your NPAs are very low as far as this is concerned. Are they rising? The answer is yes, but still it's quite marginal. So I think as a regulator, one will have to take cognizance of the fact that this could be an area of concern in future because of the fact that all banks are concentrating on personal loans, and within personal loans, I think everybody's trying to look at this unsecured part, including your credit cards, because that's where the business actually lies. So I don't think it's something which is going to create any kind of a problem for us. And now that the fact that the RBI has raised the red flag, I think banks are also going cautious when it comes to the unsecured loans. So I don't see any kind of a problem arising. But yeah, the fact that the flag has been raised means it's definitely being monitored very closely by the central bank.
Okay, Madan, one follow-up. The backdrop to today's budget has also been very closely the inflation situation, and in political year right up there, this is going to be a concern. We presented the Sea Water survey, an exclusive survey of consumers across the country, which said that despite the pain of inflation, they are very optimistic about the future of India's economy. Is inflation therefore no longer a concern in the overall macro fiscal backdrop to the union budget presentation?
No, I think inflation is the major concern, and I think the way it has really affected us is that it's reduced our consumption power. If you look at cumulative inflation over the last 3 years, it's been around 25%. So if I look at 25% of inflation means my real purchasing power has come down. So today when we keep lamenting saying that why is it consumption is not increasing, I think one of the reasons is that the purchasing power has come down. It's okay that just post-COVID, there was this pent-up demand. People didn't mind what it was. You did everything that you wanted to do. But today, if you look at the data for the current financial year, for example, look at the consumer goods. We have actually mapped inflation along with growth in production. We're assuming production is a proxy for consumption. And we have seen in almost all the consumer goods where there has been high inflation, it has actually led to slowdown in terms of production, which I assume that consumption has come down. Therefore, I think inflation is something we cannot wish away. And we should remember that inflation is prices are still increasing. When inflation comes down from 6 to 5%, we like to chill. And we all say that, look, interest rates, RBI should reduce the repo rate. But the fact is prices are still going up by 5% every year. Are our incomes going up by that extent? Are the people at a lower level, are their real incomes being compensated? The answer is probably no. I think ultimately the proof is you look at the consumption patterns. If consumption is slowed down, it's clear indication that there is a problem in terms of inflation.
And perhaps that is occasion for the government to also look at some things perhaps on the lines of what 2019, where there were some tweaks on tax. As we continue the debate, just two quick. Rail stocks trading higher ahead of the interim union budget. This has been happening ever since the market opened. Let's try and bring those stocks up, and perhaps sort of there is a hint here about continuing investment, and this was a point that was made earlier as well, that roads and railways are the key sectors where much of the government's capex is going on, and Just to add one more bit, Paytm sees a 300 to 500 crore EBITDA impact after the RBI crackdown on the payments bank. So coming back to that big stock fall of the day, but rail stocks, there any expectations, Rumki, that you have as far as the railway sector is concerned as part of the overall capex allocation, or anything new anticipated?
So the government has emphasized on highways and railways when allocating spending towards infrastructure. So I think that will be required, because the fact that railway logistics is probably one of the cheaper ones, and this is where that's why the government is emphasizing on building the railway network better. And given that the government is eyeing to reduce the logistics cost because it improves ease of doing business, it improves corporate profitability. Hence, the government is investing these sectors, railways first, and then is probably will start reallocating it in other sectors as they bring in more private players as well. Now we are expecting some play from the private sector as well. In fact, if you look at the FDI, a lot of a large proportion of FDI that we saw that came in was also getting allocated to the construction sector. That share has gone up. So this is something which we believe that the government will, while
some
invests
budget
in
trivia
its
coming
own
in,
resources.
Rumki, some budget trivia coming in to inform all our panelists who may or may not be able to see the output. Finance Minister Nirmala Sitharaman, as wire agencies inform us and those visuals available there, has chosen a blue sari for the budget presentation. Of course, there's a very bright red digital budget presentation folder. Madan, I can see you smile. Madan, let me just throw one more bit of data at you. GST collections have increased to 1.72 lakh crore in January, and now we are just 7-8 minutes from Parliament beginning. Cacophony expected in the first few minutes. But Madan, tax collections, another good story, giving considerable headroom to Prime Minister Modi and his economics team.
No, I think the tax collections have gone up because of better compliance and better collection processes. Because if you look at the overall buoyancy in the economy, just look at the situation where we are saying that we thought GDP will grow at 10.5, now it's 8.9%. So your tax collections couldn't have been that buoyant. So I think the only reason why it's happening, even though your base has slowed down, is because there has been better compliance, better collections, therefore we're getting it. The same thing holds also for GST. Higher inflation has also contributed to higher GST collections. Now the question is that in the coming year, will we still be lucky? Will we still be having the same level of buoyancy? That's a call which I think the finance minister will be taking. So when we see the numbers being presented, that's what I would be looking out for. That are we looking at the same kind of optimism in the coming years?
Okay, newsflash, Saurav, and I want you to respond on that because a lot of stories were done by the Business Today multiverse team of reporters. Tweaks expected in certain income tax rates. This is as per Cogensis Newswire flash that is just come in. Saurav, you want to take a bet on that? A repeat of 2019 perhaps?
Well, it'll be a brave person who would take a bet on that in an interim budget, and that too with experts with us here in the studio. But the fact of the matter is, yes, there is a serious expectation of people, whether the government will put more money in the hands of the people in this budget and ahead of the elections. So I think there might be some tweaks here and there, but I don't see.
That's a very carefully hedged answer, viewers. Journalists are prone to not speculating. At least at Business Today, we don't do that. But Samira and Mr. Gopalan, Madan, Rumki, practically just 5 minutes left. I want to take that big middle class relief expectation with all of you, because the budget, while it is relevant to a certain section, the middle class always asks, हमें क्या मिला इसमें से? I'll start with Samiran. Any expectation of something being done on any income tax related front? On import duties, it happened yesterday, so let's leave that out for the moment.
So I think I can't see any sort of new exemption coming just because the government is very keen to put everyone into this new tax structure with no exemptions rather than staying with the old tax structure. So if you do more exemptions on different things, then practically people will have more incentive to stay back in the old structure. So if the government can devise any tax relief which prompts people to move more towards a new tax structure, that could be attempted in the budget.
The number of people opting for new income tax scheme will be looked out for very closely. Quickly, 30 seconds to our next. Mr. Gopalan, anything we can expect a repeat of 2019 as far as tax is concerned?
I don't think so in an interim budget, but middle income group people should be, if the way of doing life is significantly eased up and infrastructure, everything is going to really become much better for them. I think that will be a great thing for them. And harassment from agencies and with the government. I mean,
what Mr. Gopalan is saying, that don't look at tax cuts. If you spend lesser time at red lights and in traffic jam, that is also in a way a cut. Rumki quickly, then Madan, and then Saurav. Saurav, you wanted to come in quickly?
Yeah, I just wanted to ask Mr. Gopalan, I couldn't resist the temptation. If we were to look at one big headline from which is an expectation from this budget, Mr. Gopalan, given your experience, what would you think that would be, given the state at which India is in and the kind of economic growth which we are seeing?
See, I would look at budget numbers, deficit, nominal growth, fiscal deficit, and tax collections, capital expenditure. These are some of the things I will look at, because these are things which will stabilize the way the government is going forward in its fiscal management.
Okay, I have to cut in everyone here, sorry. Information that Finance Minister has begun the presentation of the interim budget. Let's try and get the Lok Sabha feed up on screen. Till then, yes or no answer. Rumki, tax cuts, yes or no?
Most likely not.
Okay, Madan, yes or no? We're still waiting for the visuals
yes,
to
very
come.
marginal in the marginal change in a new tax scheme. There will be good articulation to convince the middle class that they're better off. It normally doesn't happen, but we can expect it this time.
Okay, now the visuals that we are seeing of the Lok Sabha still showing that the session feed is to begin, and obviously they wait exactly for 11 o'clock, but the big budget coverage here, viewers, we've been at it since the morning. It's very clear that the macro backdrop to the budget gives the government of the day massive headroom. The confidence with which Prime Minister Narendra Modi addressed the nation at the beginning of the budget session was very, very visible. And I repeat once again the point that he made about Disha Nirdesh. This budget, an interim one, will be Disha and Nirdesh, guidance and direction. But as he said, the big one will be July. We'll pause here on our coverage and we will rejoin just in a bit. Stay with Business Today Television as it brings you Finance Minister Nirmala Sitharaman live for Parliament. And I thank all my guests here who have been with us. Back with you in just a bit. Stay with us. Bye-bye.
Platform group of companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction.